Bitcoin. BTC. News. Need more evidence before lowering rates further, says Fed's Hammock. By Stephen Alfer. My base case is that we can stay here for some period of time, Cleveland Fed President Beth Hammock told the WSJ. Cleveland Fed President Beth Hammock, who in 2026 will be a voter on the central bank's policy-making FOMC, says interest rates need to stay on hold for several months. She threw shade on last week's surprisingly soft CPI report, noting data collection distortions created by the government shutdown. Other things being equal, Bitcoin would typically benefit from easier Fed monetary policy, but that hasn't at all been the case in 2025. It's no secret that Cleveland Fed President Beth Hammock has staked out a spot as perhaps the most hawkish member of the U.S. Federal Reserve since her appointment in 2024. After a career at Goldman Sachs. Next year, however, she will be in a more prominent position to advance those views. The Fed's Federal Open Market Committee, FOMC, sets interest rate policy. Among its 12 voting members are 4 of the Fed's 11 district presidents who serve rotating one-year terms in 2026. The head of the Cleveland Fed, Hammock, will join that voting group. My base case is that we can stay here with rates for some period of time until we get clearer evidence that either inflation is coming back down to target or the employment side is weakening more materially, Hammock told the WSJ over the weekend. I take it with a grain of salt, said Hammock of last week's November consumer price report, which showed a shocking decline in the headline rate of inflation to 2.7% from 3.1%. With a similar drop for the core rate. Hammock blamed data distortions due to last fall's government shutdown, and her own calculation puts the rate at more like the 2.9% or 3.0% that economists had previously forecast. All things being equal, easier central bank monetary policy is assumed to be good for risk assets like stocks, commodities and Bitcoin BTC $88,134. While that's surely been the case this year for stocks and commodities like gold and silver, all of whom are at or near record highs, Bitcoin has struggled, beginning a tumble from its own all-time record not long after the Fed's first rate cut in September. A big break with Waller. Among the finalists to be President Trump's pick for the next Fed chair is current Fed Governor Chris Waller. Waller 3 days ago said he judges the current 3.5% to 3.75% level of the Fed funds rate range as 50 to 100 basis points above the neutral level, meaning Fed policy remains fairly restrictive. Hammock, though, told the WSJ that the Fed funds range today is a little bit below the neutral rate, meaning she thinks current policy is at least somewhat stimulative. That's a massively wide delta between two of 2026's key policy setters. Wherever rates go in 2026, there are sure to be dissents on what is typically a unanimous or near unanimous vote. Whoever ends up Fed chair could find it problematic to line up the 7 votes needed at each meeting to set policy. Tom Lee responds to controversy surrounding Fundstrat's differing Bitcoin outlooks. By Siamak Masnavi. AI Boost. Tom Lee weighed in after X users questioned whether Fundstrat analysts were contradicting each other on Bitcoin, pointing to differences in role, timing and risk management. X users flagged what appeared to be conflicting Bitcoin outlooks from Fundstrat's Tom Lee and Sean Farrell. Lee endorsed a post arguing the views reflect different mandates and time horizons, not internal disagreement. The episode highlights how public commentary can blur distinctions between short-term risk management and long-term macro views. A debate on X over whether Fundstrat analysts are sending mixed signals on Bitcoin intensified over the weekend, prompting a response from the firm's co-founder that appeared to endorse a more nuanced explanation of the differing views. The discussion began after an X user known as Heisenberg at MR_derivatives shared screenshots that he said showed contrasting outlooks from Fundstrat's leadership. One highlighted comment attributed to Sean Farrell, Fundstrat's head of digital asset strategy, outlines a base case in which Bitcoin could retrace toward the $60,000 $65,000 range in the first half of 2026. Another pointed to Lee's recent public comments suggesting Bitcoin could make new all-time highs, potentially as soon as early 2026. The juxtaposition quickly gained traction on X, with users questioning whether Fundstrat was contradicting itself or offering unclear guidance to clients. That framing drew a detailed response from another X user, Cashin, at Convex Dispatch, who said he was a Fundstrat client and argued the debate was misleading. Cashin wrote that the firm's senior figures operate with different mandates rather than a single unified forecast, distinguishing between long-term macro views, portfolio-level risk management and technical analysis. According to the post, Farrell's comments reflect a defensive positioning framework focused on drawdown risk, flows and cost bases, rather than a long-term bearish thesis on Bitcoin. Cashin said Farrell had reduced crypto exposure within Fundstrat's model portfolio as a risk management decision, while remaining constructive on longer-term adoption trends beyond early 2026. Lee's role, by contrast, was described as more focused on macro liquidity cycles and structural shifts in markets, including the idea that institutional adoption and exchange-traded products are changing Bitcoin's historical four-year cycle dynamics. Technical analyst Mark Newton was also cited as operating independently, with views based strictly on chart structure rather than macro narratives. Lee, who is also the chief investment officer at asset management firm Fundstrat Capital and the executive chairman of BitMine Immersion Technologies, BMNR, appeared to acknowledge that explanation by responding, "Well stated," to Cashin's post on X. A move likely to be widely interpreted by market participants as a tacit agreement with the characterization. While neither Lee nor Farrell has issued a formal public statement addressing the screenshots directly, Lee's response suggested that the differing outlooks are not mutually exclusive. At the time of writing, Bitcoin was trading around $88,283. Up about 0.5% over the past 24 hours, while the broader crypto market was up by the same amount. Bitcoin's BTC four-year cycle playing out as expected. By Stephen Alfer, the director of global macro at the asset management giant, remains a secular bull on Bitcoin, but isn't optimistic about the next year. A number of notable market analysts of late have dismissed the idea of Bitcoin's four-year cycle and the nearly certain bear market that might imply. Fidelity's Jurian Timmer, however, says the action so far this time around lines up about perfectly with past 4-year cycles and the current bearish action should last deep into 2026. It's become fashionable of late to dismiss Bitcoin's BTC $88,073 4-year cycle and the inevitable boom and bust it brings as an anachronism. Just in the past week, Bitwise's Matt Hogan and ARK Invest's Cathie Wood have thrown their considerable weight behind the idea of dismissing the 4-year cycle. Each noted the ETFs, along with regulatory and institutional acceptance, that have blended Bitcoin into the traditional financial system. Bitcoin is no longer a fringe asset and there's no reason for it to follow the same pattern today as it did years ago. Defining the cycle. The 4-year cycle is a price pattern linked to Bitcoin's halving events, which occur roughly every 4 years. These halvings reduce by 50% the amount of Bitcoin rewarded for mining one block. The 50% cut is thought to lead to a supply shock, thus forcing a major run higher in price. Following the big bull move comes a crash in the 80% area and then a steady grind higher into the next halving event. Chart squigglers like to point to the bull runs and subsequent crashes that occurred following the $2012, $2016, $2020 halvings, and say things are playing out the same for the $2024 event. The sharp run higher, which eventually topped out in October 2025 above $125,000. And then the bear market, which is where the market finds itself now. Fidelity's Timur weighs in, an early believer in Bitcoin among the traditional finance crowd. Jurian Timur, asset management giant Fidelity's director of global macro, isn't seeing anything in his charts that says the 4-year cycle is dead. If we visually line up all the bull markets, we can see that the October high of $125,000 after 145 weeks of rallying fits pretty well with what one might expect, Timur said earlier this week. As for what's next, that would be winter. Timur noted that the subsequent bear markets tend to last about 1 year. My sense is that $2026 could be a year off or off year for Bitcoin. Support, he concluded, is in the $65,000 $75,000 range. Bitcoin underperformed gold, but ETF holders remained resilient. By James Van Straten. Bitcoin, BTC, corrected 36% from its October all-time high, while U.S. spot Bitcoin ETF holdings declined by only about 3.6%. Gold surged 65% in 2025, while Bitcoin fell 7% after both assets were up roughly 30% through August. Bitcoin corrected 36% from its October all-time high, while U.S. spot Bitcoin ETF holdings declined by only about 3.6%. From 1.37 MBTC in October to roughly 1.32 MBTC. Despite Bitcoin underperforming gold on price, Bitcoin exchange-traded product flows outpaced gold ETP flows in 2025. Looking back on 2025, the sound money, or debasement trade, was decisively won by the metals over Bitcoin. Gold delivered one of its best years on record, up 65%, while Bitcoin so far is down 7%. Until August, the two assets had similar returns, both up roughly 30%. From that point, gold surged while Bitcoin rolled over sharply. This divergence reinforced that gold won the debasement trade narrative, leaving Bitcoin firmly behind. Bitcoin remains in recovery mode after a 36% correction from its October all-time high, struggling in the $80,000 range. Despite the price weakness, capital flows tell a different story. Bitwise Managing Director Bradley Duke pointed out that flows in Bitcoin exchange-traded products, ETP, outpaced gold ETP flows in 2025 despite gold's blockbuster year. The debut of U.S. spot Bitcoin ETFs in January 2024 marked year one of institutional adoption, while year two saw continued strong participation even as price failed to follow. The most notable takeaway from this current correction in Bitcoin is the ETF investor resilience. Despite a 36% price drawdown, total Bitcoin ETF assets under management, AUM, declined less than 4%. Data from CheckInChain shows US ETFs held 1.37 million BTC at the October peak and still hold around 1.32 million on deck. 19. This suggests the bulk of the sell-off did not come from ETF holders. BlackRock's iShares Bitcoin Trust, IBIT, has increased its dominance during this correction, now holding just under 60% market share with roughly $780,000 BTC under management. It is clear to see Bitcoin's correction was not driven by ETF outflows. Bitcoin price could hit $143,000 in a year, Citi says, citing ETF and regulatory tailwinds. By Olivier Acuna, Citi analysts forecast a 62% BTC rally fueled by revived ETF flows and U.S. digital asset legislation, with key support at $70,000. Citigroup's base case for Bitcoin, BTC, is a rise to $143,000 in 12 months. Analysts highlight $70,000 as key support, with the potential for a sharp rise due to revived ETF demand and positive market forecasts. The bear case sees Bitcoin falling to $78,500 amid a global recession, while the bull case predicts a rise to $189,000 due to increased investor demand. Amid the recent bearish price action, the headline on Citigroup's 12-month outlook for Bitcoin BTC $88,123 of $143,000, or about 62% upside from the current $88,000, will raise some eyebrows. We forecast increased adoption of digital assets, spurred by potential U.S. digital asset legislation in the second quarter, with Bitcoin likely ranging into the new year around $80,000 $90,000. User activity values, Citi analysts Alex Saunders, Dirk Willer and Vin Vo said in their joint report. They said to keep an eye on the $70,000 level as key support, noting that was roughly Bitcoin's price just ahead of Donald Trump's 2024 election victory. Their base case 12 months out is for a sharp rise to $143,000. Driven, they said, by revived ETF demand and positive stock market forecasts. Regulatory catalysts, in particular passage and signing of the Clarity Act, already passed in the House, should drive further adoption and fund flows. They added, but there's also a bear case, and the group pegs that target at a lowly $78,500 are down more than 10% from current levels. They believe a global recession would be the catalyst. The bull case would be $189,000, or more than doubling from current levels. And that would be thanks to increased end investor demand, they said. Bitcoin price news. Here's why BTC is stuck on tough $89,000 ceiling. By Christian Sandor, James Van Straten. Bitcoin bulls are putting up a fight on Friday to break this week's choppy action that has capped all advances at around $90,000. Bitcoin bounced above $89,000 overnight, but bulls are once again struggling to maintain gains in the U.S. session. ETH, SOL, Sway lead the altcoin rebound, up over 5% from Thursday's lows. U.S. equities are showing strength, also helping to boost crypto-related stocks like Bitmine and Galaxy. Bitcoin BTC $88,344 bulls are fighting to break on Friday what's been a consistent pattern of sell pressure during U.S. hours, dipping below $85,000 late on Thursday afternoon. BTC once again climbed after U.S. markets closed, pushing back above $89,000 they opened Friday morning. That level, though, has roughly capped every attempt of a breakout throughout the week, with sellers hammering prices back to square one, sometimes within minutes and sometimes over the course of a few hours. The largest crypto for the moment is holding fairly steady ahead of the pre-holiday weekend, trading at $88,400, up 0.3% over the past 24 hours. Ether ETH $2,983 bounced to just shy of $3,000, up 1% over the past day, while Solana's SOL $125.54 and Sway $4,370 lead the overnight rebound among altcoins. U.S. equities are having another strong session, led by the Nasdaq's 1% gain, with AI bellwethers Nvidia, Oracle and AMD rising 3% to 6%. Read more. Oracle TikTok deal lifts AI mining stocks. Digital asset-related stocks followed suit in the rebound. Ethereum treasury firm Bitmine, BMNR, advanced almost 8%, while Galaxy Digital, GLXY, and stablecoin issuer Circle, CRCL, were each up around 3%. Strategy, MSTR, the largest corporate BTC holder, also bounced more than 3%, pushing its multiple to net asset value, MNAV, to 1.09. Meanwhile, Bit Digital, BTBT, is up 10% following news related to white fiber. WYFI has signed a 10-year, 40 megawatts co-location agreement with Nscale, valued at approximately $865 million. BitDigital owns roughly 70% of white fiber, itself ahead 11%, amplifying the positive impact on BTBT shares. Most influential. Luke-Jr. By Jamie Crawley. The veteran Bitcoin developer is at the forefront of one of the most hotly discussed debates in crypto: what the original blockchain network should be used for. Veteran Bitcoin developer Luke-Jr. is at the forefront of one of the most hotly discussed debates in cryptocurrency. What the original blockchain network should be used for. The advent of the Ordinals protocol in 2023, which allowed a form of NFTs to be minted on Bitcoin. And Runes a year later, which did something similar for fungible tokens, prompted calls from a number of voices, few as prominent as Dash Jr.'s, that they bring unnecessary spam to the Bitcoin network, distracting it from its core mission. This feature is a part of CoinDesk's most influential 2025 list. Dash Jr.'s resume includes helping fix Bitcoin's accidental hard fork in 2013 and maintaining the alternative Bitcoin knots, giving him status as a venerable developer and commentator who warns against allowing a proliferation of non-financial transactions on Bitcoin. This forms part of the controversy around the proposed changes to the blockchain's op_return, removing the 80-byte cap on data that can be attached to transactions via inscriptions. Dash Jr. called this utter insanity, warning that loosening data restrictions would clog up the network with what he calls spam and detract Bitcoin from its core purpose as decentralized digital money. Dash Jr.'s critics, however, argue that his vision of Bitcoin requires compromising its principle of immutability. Ocean, the Jack Dorsey-backed mining pool of which Dash Jr. is a founder, has declined to process some inscription transactions. Such debates will continue into 2026 and beyond, and it is likely that Luke Dash Jr. will remain one of the most prominent voices in them. As of October 2025, Go Plus has generated $4.7 million in total revenue across its product lines. The Go Plus app is the primary revenue driver, contributing $2.5 million, approximately 53%, followed by the Safe Token protocol at $1.7 million. Go Plus Intelligence's token security API averaged 717 million monthly calls year to date in 2025, with a peak of nearly 1 billion calls in February 2025. Total blockchain level requests, including transaction simulations, averaged an additional 350 million per month since its January 2025 launch. The $GPS token has registered over $5 billion in total spot volume and $10 billion in derivatives volume in 2025. Monthly spot volume peaked in March 2025 at over $1.1 billion, while derivatives volume peaked the same month at over $4 billion. Latest BTC bull turns bear. Jurrien Timmer warns of year-long crypto winter. By James Van Straten. Fidelity's global macro director, Jurrien Timmer, has called the end of the latest Bitcoin bull run, while highlighting gold's continued bull market strength. Fidelity's global macro director, Jurrien Timmer, says Bitcoin's October peak near $125,000 aligns closely with prior four-year cycles in both price and time. Timmer suggests 2026 could be a year off for Bitcoin, with key support seen between $65,000 and $75,000. Timmer contrasts Bitcoin's recent weakness with gold's strong 2025 performance, noting gold is behaving as expected in a bull market by holding on to most of its gains during its latest correction. Jurrien Timmer, director of global macro at Fidelity and a longtime Bitcoin bull, has become one of the latest financial strategists to turn more bearish on Bitcoin BTC $88,253. Citing the asset's 4-year cycle, Bitcoin has historically followed a repeatable pattern. And from both an analog and time-based perspective, the current cycle appears to be aligning closely with prior ones. Timur argues, the October all-time high near $125,000, reached after roughly 145 months of cumulative rallying, fits well within the framework. Bitcoin bear markets, often referred to as winters, typically last about a year, Timur says. As a result, he sees $2026 as a potential year off for Bitcoin following the conclusion of the latest halving-driven cycle. While I remain a secular bull on Bitcoin, my concern is that Bitcoin may well have ended another 4-year cycle halving phase, both in price and time, Timur wrote on X. If we visually line up all the bull markets, we can see that the October high of $125,000 after 145 months of rallying fits pretty well with what one might expect. Bitcoin winters have lasted about a year, so my sense is that $2026 could be a year off for Bitcoin. Support is at $65,000 to $75,000. Timur also highlights gold's strong performance in 2025, contrasting it with Bitcoin's negative year, and does not expect a near-term mean reversion between the two assets. Gold is firmly in a bull market, up roughly 65% year-to-date, outperforming global money supply growth, Timur noted. He adds that during the recent correction, gold has held onto most of its gains, which he views as characteristic behavior of a bull market. Metaplanet, $3,350. To start sponsored ADR program to woo over-the-counter U.S. investors. By James Van Straten. AI Boost. The sponsored Level 1 ADR listing strengthens U.S. investor access, settlement quality and market credibility, the company said. Metaplanet's sponsored Level 1 ADRs will trade over the counter under the ticker MPJPY starting Dec. 19. The ADRs will offer U.S. dollar settlement, improved liquidity and standardized U.S. market infrastructure without raising new capital. Metaplanet shares rose 6% in Tokyo trading to 443 yen, $2.80. Japanese Bitcoin treasury company Metaplanet, $3,350, said its American depository receipts, ADRs, will start trading Dec. 19 on the U.S. over-the-counter OTC market under the ticker MPJPY. The securities are designed to improve access, transparency and operational efficiency for U.S.-based investors in the fourth-largest corporate holder of Bitcoin BTC $88,214. They will replace existing, unsponsored OTC trading under the MTPLF ticker, which lacked a formal deposit agreement and direct company involvement. The ADRs meet Level 1 issuance standards, meaning they are subject to the lowest level of compliance and regulation and cannot trade on regulated exchanges. Each ADR represents one common share and settles through standard U.S. securities infrastructure. Deutsche Bank Trust Company Americas will act as depositary, with MUFG Bank serving as custodian in Japan. The program is not intended for capital raising and does not affect the company's total shares outstanding. Even though the ADRs are limited to OTC trading rather than on Nasdaq or the NYSE, they offer materially improved settlement, much broader brokerage access, and significantly lower trading fees than unsponsored OTC instruments. Dylan LeClaire, head of Bitcoin strategy at the Tokyo-based company, said in a post on X, "The structure removes key barriers for both retail and institutional investors, many of whom require compliant ADR frameworks due to regulatory and custodial mandates." He said, Metaplanet shares rose more than 6% in Tokyo to 443 yen, $2.80. Bitcoin, BTC, jumps above $87,000. Yen slides as Bank of Japan hikes rates by 25 basis points. By Omkar Godbal, the Bank of Japan raised its short-term policy rate by 25 basis points to 0.75%, the highest in nearly 30 years. The Bank of Japan raised its short-term policy rate by 25 basis points to 0.75%, the highest in nearly 30 years. Despite the rate hike, the Japanese yen fell against the US dollar, while Bitcoin saw a slight increase in value. Market reactions were muted as the rate hike was anticipated, with speculators already holding long positions in the yen. Bitcoin BTC $88,214 strengthened as the Japanese yen dropped after the Bank of Japan (BOJ) hiked interest rates as expected. The Japanese central bank raised its short-term policy rate by 25 basis points to 0.75%, the highest level in roughly 3 decades, continuing the gradual shift away from decades of ultra-loose monetary policy. In the policy statement, BOJ acknowledged that inflation has held above its 2% target for an extended period due to rising import costs and firmer domestic price dynamics. However, policymakers emphasized that interest rates adjusted for inflation remain negative, implying that monetary conditions are still accommodative even after the hike. The Japanese yen slipped to 156.03 per US dollar from 155.67 following the rate decision. Bitcoin, the leading cryptocurrency by market value, rose from $86,000 to $87,500 before pulling back slightly to trade near $87,000 at press time. CoinDesk data show the market reaction aligns with expectations, as the rate hike had been widely anticipated. Furthermore, speculators had held long positions in the Japanese yen for weeks, preventing any sharp yen buying response after the announcement. In recent weeks, some observers had expressed concerns that the rate hike could strengthen the yen, triggering an unwinding of yen carry trades and a broad-based risk-off sentiment. For decades, Japan's ultra-low or even negative interest rates made the yen a preferred funding currency for carry trades. Investors borrowed cheaply in yen to invest in higher-yielding assets, including the U.S. tech stocks, Treasury notes and emerging market bonds, amplifying global liquidity and risk appetite. This strategy thrived as long as Japan's rates stayed pinned near zero, effectively turning the yen into a key enabler of leverage and risk-taking across global financial markets. So, the prospects of higher rates in Japan scared risk asset bulls. These fears, however, were overblown, as CoinDesk explained, noting that even after the rate hike, Japanese rates would remain notably cheaper than their U.S. counterparts, ensuring there is no mass unwinding of carry trades. DeFi is dead, as trillion-dollar market awaits on-chain finance, says Maple Finance CEO Powell. By Will Canny. The Maple Finance CEO says institutions will stop distinguishing between DeFi and TradFi as private credit moves on-chain, and stablecoins process $50 trillion in payments. Maple Finance CEO Sid Powell argues DeFi is dead as a separate category, predicting all capital market activity will eventually settle on blockchains. Tokenized private credit, not tokenized treasuries, will be the main growth engine for on-chain finance, with DeFi market cap on track to reach $1 trillion. Powell expects a high-profile on-chain credit default and a surge in stablecoin payments to $50 trillion in 2026, driven by small businesses and neobanks seeking lower fees. DeFi is dead. That's how Maple Finance CEO and co-founder Sid Powell summarizes what he sees coming for crypto over the next few years. However, this doesn't mean the end of decentralized finance. Rather, it is the end of treating DeFi as something separate from traditional markets. Institutions won't distinguish between DeFi and TradFi at all, Powell explained to CoinDesk in an